we like to turn companies around from being only oil and gas to being 50% wind and electricity. We just do it because it's the right thing to do, but it's also that's where the business is.
And so in terms of resilience and sustainability, that's just core to what we do and what we have to think about every day. What that means right now, that's sort of keeping your eye on the horizon, cutting through the noise, the headlines, as you are probably well aware, and see that our course remains firm.
Welcome to The Sustainable Edge, your podcast that moves sustainability beyond talk. You get to hear sharp perspectives and leave with insights you can put into action. I'm your host, Joachim Nahem, and this podcast is produced by Position Green.
Welcome to Sustainable Edge. At a time when many investors are becoming more cautious around climate and sustainability, others are still making major long-term bets. Just recently, a Wallenberg-backed consortium supported a 1.4 billion euro financing into Stegra, a major investment in green steel, one of the hardest sectors to decarbonize. This raises a broader question. What does responsible long-term investing look like in a world that is becoming more uncertain? Because unless you've spent the last year off-grid somewhere, and that may have been a good idea, you probably noticed that priorities are shifting pretty quickly. Geopolitics, security, resilience, and competitiveness are all moving back to the center of decision-making. And sustainability is increasingly being tested against economic and strategic realities. So how do serious long-term owners think when the trade-offs become real? That's exactly what we're going to explore today, live here at Position Green's annual event with more than 300 leaders from across the Nordics and Europe. And for those listening in, this is a special live edition of the Sustainable Edge podcast. I'm today joined by two exceptional guests from two prominent and distinct Nordic ownership traditions. We have Siri Sachs, who's a board member of the Wallenberg Investments and part of the sixth generation of the Wallenberg family, what is often referred to as the Wallenberg ecosystem, which comprises of 16 foundations that fund excellence in research and education, as well as the industrial holding companies, such as Investor AB and Wallenberg Investments, with a portfolio of companies like ABB, Atlas Copco, SCB, AstraZeneca, and Ericsson. We're also joined by Johan H. Andresen, who is the owner and chair of FERD, a family-owned investment company that he transformed from a tobacco business into a diversified 5 billion euro platform with holdings including companies like Elopak, Swix, and it combining a private equity-style investment with a strong focus on social impact. Johan has also chaired the Ethics Council of NBIM, the Norwegian Sovereign Wealth Fund, and helping define the ethical boundaries of one of the world's largest funds. Siri and Johan, welcome to Sustainable Edge.
Thank you.
It's so good to have you here today. Siri and Johan, I want to start off this conversation with, we hear a lot about resilience. Resilience is kind of a new buzzword about how do you ensure resilience in a very turbulent world. What does this resilience actually mean from an investor perspective? And is sustainability part of this resilience theory from your perspective when you're investing? Siri.
Thank you, and thank you for having me. It's a privilege to spend some time on these topics with you. Well, I represent the Wallenberg Foundations, and the grant giving has sort of a time horizon of perpetuity. And so in terms of resilience and sustainability, that's just core to what we do and what we have to think about every day. What that means right now, that's sort of keeping your eye on the horizon, cutting through the noise, the headlines, as you are probably well aware, and see that our course remains firm and that we guide our assets, our companies that we hold, to fulfill that strategy. And we want to increase the dividend over time, so this is not sort of a short-term game, to be able to increase that share of grants that we give out to excellent science and research.
And let me ask you just off the bat, we mentioned this investment in Stegra, green steel, where you're leaning in when others are leaning out on these type of green investments. What was the sort of resilience theory there of your investment?
Sure. I mean, others, depending on how you define it, it's not just us. We have a group of a consortium, and it's existing shareholders and new ones coming in. So we don't stand alone in this. And there are many of us who really have a conviction in terms of Stegra, the technology, the company. Also, Sweden has a legacy and a long history of being very competitive in steel. And we think it's pretty critical for Sweden that we maintain that position. And in terms of where sustainability and competitiveness is very well aligned, this is a bet we were willing to take, even though we understand it's very complex. It's a major undertaking. But we think that this is something that is good for Sweden's renommee and industrial sort of brand.
So
honestly.
It's kind of an industry investment with green benefits on top of it, or were the green benefits part of the investment theory?
I would say that being competitive long term is sort of what businesses will survive in a few years down below, and thinking in terms of perpetuity then, how could you do it otherwise? What could steel making look like tomorrow? So we were convinced someone is going to do this. And this is a pretty good time for us to step in and make sure that we can follow through, and maybe faster than it would have otherwise. So it's not sort of a sustainability linked investment in itself. It's more of how can we remain competitive? I mean, we have other sort of issues in terms of demographics and what have you, and fierce competition from abroad. So this is a niche that we believe in, and we're deeply ingrained in the sort of Swedish industrial value chain.
Yeah.
So it sort of makes sense for the whole ecosystem.
And we'll come back to this topic of competitiveness and what sustainability has to do with it. But Johan, when we hear from you and resilience, I mean, you inherited essentially a tobacco business, which you transformed. I guess the assumption was that you felt tobacco was not a resilient strategy, and you've transformed this. But again, the world looks different than maybe when you did this initial transformation. Where does sort of resilience as a concept, or is it at all useful as a concept, come in from your perspective?
Well, I don't think we ever used the word resilience. I mean, it's a typical consultant type of word, right? Yeah, you recognize it. You know, it's the next pitch. I mean, family businesses do not survive unless they're resilient. I mean, so that's sort of the foundation for the whole thing. That you need to renew yourself at least as fast as the world around you. Hopefully a little bit faster than your competitors, and hopefully taking risks which are unique in a sense, or that family businesses or controlled systems can take that other more public type of companies are not willing or able to take. So I think there's both an opportunity in the resilience and staying, running fast, but there's also a duty. And within the sustainability sort of scheme, there's a lot of risks you can take. Some are a little bit too big for our system. So it's better that the Wallenberg takes the Stegra, and we will take something else.
Can you give us an example?
There is a size difference here. I mean, size does matter, but you have to find, make your own playground and be big in that one. And of course, Wallenberg is big in a lot of playgrounds. So the resilience is just, 5 years from now, we'll be talking about something else. And resilience will still be there. It'll still be important. So it's just a way of, I guess, transforming.
But let's park the jargon then on that term, and maybe just give us a concrete example of, so maybe you haven't done a recent investment like Stegra, but you do investments all the time. And as you said, it is obviously you're looking for return on investment, but you also have a DNA of social impact and of other factors. I'm assuming your decision to transform your the company you inherited from tobacco to something else was in part moral as well, not just a business case. So can you give us some examples of where you applied this philosophy of investing?
Well, I didn't really have a philosophy. When you inherit a business, first thing you got to understand that you do not necessarily deserve this, and you are not the best leader. So I mean, there's no statistical probability that you are the best leader, but you're given the baton and you run with it as best as you can. So
you've done quite well. So you're giving that credit to someone else.
That's not necessarily because of me, but it's because of that self-insight that that you need to attract great people with good values and high potential. And they have to be a lot better, have a much bigger potential than you. So that wasn't too hard, attracting those people or finding them. Attracting them is a different story. So we built a team, and I have, I'm not the sort of the visionary leader in terms of we go this way or that technology is one we're going to really use, and we're going to partner with those and so forth. I try to get people on board and they fix it. I mean, that's 80% of the business, and then there's a little bit of risk and allocation and a little bit of marketing and little tweets back in the days. But it's I'm trying to get out of the way most of the time. And get in the way when there's other trouble or some unique opportunities that needs a champion.
Well, maybe it doesn't add up to a philosophy, but it seems to be working from a return of investment perspective. But can you give us a little bit of sort of the themes under which you invest that are tied in some way to sustainability or impact? Because impact is part of your approach.
Well, we do have two business units that actually have either impact, and it's a climate mandate, and there's one that has a social mandate. And we believe both are important, but in terms of making overall impact on society, these two business units are examples of risk-taking that hopefully inspires the large operating companies and just executives and the boards there to take on more risk, to actually try technology that seems, perhaps not proven or aligned with somebody who we don't really know, to get a sustainable type of result that we can be proud of. So it's the risk-taking that is important. But in terms of impact, well, I mean, the net present value of bringing one person from outside school, outside work, back on the school work track, that's about 1 million euro or 12.1 million kroner. So it's, if you can make it, if you can make that person take a new choice in his or her life, that is a huge win. Of course, that win does not necessarily look, doesn't show up on our bottom line always. But we have noticed a very funky fact, and that is that actually taking responsibility that we do not have is something that people like. People are attracted to it. And we know, at least in 2 cases, family has sold their businesses to us, even if we didn't have the highest price.
But that seems to be a little bit of an X factor then, if you're saying it's also about attracting talent. So talent wants to go to a place with purpose, or at least something that is maybe more than just their paycheck. And I wonder, for the sort of Wallenberg approach here, you also have some sustainability requirements as an investor, and you said you're investing in Swedish industrial innovation. This must also matter, though, in terms of attracting companies, so investments, but then also talent. Does this resonate? And even though he's declared himself the little or tiny brother here in terms of investment universe, do some of these things resonate with you, Siri?
Definitely. I think historically, though, we haven't played so much on our brand, if you call it that. But for the people who understand that their work is contributing to grants that go back to society, I think people find a lot of purpose in that. We also think that, in the region that we are stronger together. So, we put value to the network and getting people to meet and collaborate across industries and across companies in a way that I think makes work more meaningful to a lot of people. So I think there are definitely those type of aspects.
And I would think with the Stegra investment, even though you're not the only investor there, it is actually a brand. It attracts others and it helps maybe de-risk for others to join this if you're leading a coalition? So you were actually kind of attract additional investment by going in, even if you're a minority investor, I would assume.
We think so, and that's what the feedback we get. But I mean, that's a trust that we have to very much sort of take responsibility and honor. So we have put a lot of work into sort of vetting the technology and the soundness of the business model, and hopefully we can do it together. But it's not for us alone to sort of solve.
No, and that I understand is part of your you're almost like an index fund, or you invest in a lot of companies alongside others. And but I want to ask you, you were introduced as the sixth generation of Wallenberg, so you've obviously been investing as a family for quite some time, through almost actually centuries, decades, centuries, and we've seen upheaval before in the world. This is not the first time we experience geopolitical instability or technology disruption. Any insights from having sort of invested over 6 generations in terms of where we stand as a world today, in terms of some people see this almost as like a precipice where we could fall down, and we heard Johan Nahem before in terms of the planetary boundaries and this being a tipping point and how critical it is. But you guys have sort of been through world events before and technology disruption. Any insights?
I guess we calculate our birth sort of 170 years back.
170,
or so,
there you go, so centuries.
And started. It's really easy to get focused on success or brand or headlines, but I think we have been involuntary investors for some time. It's actually been a rescue mission that we have a good heritage of, and keeping long and strong relationships with our partners, our customers, and that has sometimes led to actually ending up with a stake in a company that wasn't necessarily the idea to start out with. We come from a banking, a financing perspective. So that's one take on it. And I guess that sort of speaks to the different crises that we have overcome over time. And then, I mean, it's a very morbid saying, but I guess you've all heard that in bad times, it's a good time to make good business, and hopefully that's a bit of a silver lining, that we know that the sort of decisions you make today can actually be quite good and determine the future as well.
And is that, maybe you can't disclose, but with Stegra, I would think that is part of the investment, while others invested at sort of peak green hype in 22, 23, and there were, let's say, exuberant valuations of companies like Stegra. You've now sort of, you still see the investment case, but you've sort of waited until it's hit, if not rock bottom, at least you're coming in now when maybe there is more of an opportunity and you get more shares for the money. So I guess that is in line with what you're describing.
It is, and the future will tell.
Yeah. And are there other, and I know you won't put it as green investments, but do you see other opportunities with that? There's sort of been a pendulum that swung too far on valuations for green investments, and maybe it swung too far the other way, and that there are opportunities that other investors are maybe not seeing because they follow these fads in terms of green or anti-green.
Yeah,
you see more opportunities in this space?
From our stewardship, I think we go mostly to see what our customers are requiring or asking of us, and maybe foresee those needs, a bit of what you were saying, be a bit faster than competition. So we find a lot of opportunity in terms of energy efficiency and using less material, and so I think we're fairly well aligned and on track for being competitive also in sort of a circular economy, which is what we're aiming for. So definitely, we don't go in and out as investors, so it's hard to say that we're being opportunistic in that sense, and we still need to sort of keep that eye on the long-term horizon as well.
So Johan, you mentioned, or I introduced you also as having headed the Ethics Council at NBIM, and in that sense, that fund actually is much larger than Wallenberg in terms of it's a trillion, or at the time perhaps $1 trillion. Now it's almost $2 trillion invested essentially everywhere globally, except in Norway. And it has ethical guidelines which are supposed to guide these investments in the investment universe. But can you share with us some insights from your time on that Ethics Council, where, again, they're investing in some of the largest brands or companies around the world, and there are ethical questions across E, S, and G that pop up. What's your learning from that experience?
Oh, well, that is a big question. Right now, as you know, the mandate is sort of frozen a little bit. One is doing sort of an evaluation of it. But the Council on Ethics only evaluate companies that are already in the fund. Yep. So the investment analysis is done by the fund management itself. And I think when I took on the mandate, I thought my job was pretty much to get rid of as many companies as possible. So negative type of screening. I discovered quite quickly that because of the size of the fund and because that the internet never forgets, people were quite eager to stay in the fund. They were quite eager to maybe change their conduct to get away from possible future norm violations. And therefore we managed to, this is not even the mandate of the council, but it turned out that the threat of being thrown out actually worked.
There's a nudging there in terms of...
Well, it's more than nudging. I think the most sort of famous case is in Lesotho, of all places. And we were looking at manufacturers of textile production all over the world. We had gone through 364 companies, been in Vietnam, Taiwan, and looked at many. Some were excluded, and there was one company left, a Taiwanese company that had 3 plants in Lesotho. Now, I don't know if you know much about Lesotho, but Lesotho has mountains.
Let's assume they don't.
Yeah, Lesotho has mountains. If you have mountains, you have rivers, and in rivers there are water, and you need water to make denim. So the biggest customers of this company were Levi's, Lee, Wrangler, Gap. And there were 720 women employed there, and everyone, in order to get a job, keep a job, or get a promotion, had to perform sexual favors. Rampant norm violations. And of course, the instinct is, throw them out. But the people we had on the ground there said, well, wait a minute, we can actually enforce them to change. And the customers played along, and we set up a monitoring system by which if they reduced and got rid of the people who were doing these violations and improved their practices, they would keep their customers. If they did not, they would cut 25% of the orders every quarter. And 1 year they would be completely out of business. And we turned it around, and it's now called the Lesotho model. And Hennes & Mauritz, H&M, has used it in India and Bangladesh. So it just got to show that you can actually, even if you have one mission, you can actually turn it into another mission. Actually, that's one that I'm pretty proud of. Yep. Of course, Trump came in and fucked up the whole thing by putting 56% tariffs on them. So the factory is actually closed. I think they're coming back now, now that the Supreme Court has annulled those tariffs. But yeah, so I want to go back and see how the women are doing. Actually, because I like to fly fish, and that was actually the real reason why we took a look at those companies. But
so you can fly fish with a good conscience. Yes. Okay, but I think you raised a very important question or topic here, that is engaging suppliers, and that you have a sort of impact beyond just your business, right? You're part of an ecosystem where there could be unintended consequences in terms of how you engage with suppliers, but also how you react to that, meaning that the sort of risk approach typically is then to remove yourself, remove your company from risk, rather than helping try to fix it, whether in this case it's local suppliers or people in Lesotho, or whether it's cobalt mining in Congo, where in your iPad here you could say we're going to sort of de-risk and then not engage there, but then again you're taking away economic opportunity for people in a country that need it more than anyone in the world. But I guess my question is, from an investor perspective, should we have ethical considerations? Should there be ethical guidelines? And to you, Siri, do you have a ethical boundary of what you can invest in? Are there sort of guidelines that says we will not invest in certain things? Or do you just try to be a positive driver for change by engaging with companies and having the companies engage with their suppliers and sort of end up in a positive outcome like Johan described?
We don't have concrete sort of exclusion criteria, but if there were one, I would say sound ethical standards would be it. And we also look for strong culture internally. That said, and we also continuously evaluate whether we are the best home for a company, if we are the best change maker, or if we will be able to enact that, what we have, the ambition for that company. So once we're in it, of course, we will try to do our best to actually get that change through. But I would still stress that the sort of ethical standards, that's a pretty high threshold for us.
So engagement rather than exclusion, which is also with NBIM their sort of primary approach. That's a last resort to throw a company out.
But I mean, sometimes when reality changes, I wouldn't say ethics change, but for instance, FERD, we had on the list of no-goes, we shouldn't invest in weapons. We'll let somebody else do that. Okay, then we have the full-scale war in Ukraine. We have 150 people on the ground in Ukraine, south of Kyiv, 21 in uniform. I think 6 or 7 have been severely wounded, and 3 have fallen. So basically, you go from being, okay, it's out of the room, till it's definitely in the room, it's on your desk. So when our people get killed, I take that personally. So now we say, okay, we are still supporting a lot of humanitarian or support to the front line. But now we think, okay, let's invest in Ukraine's ability to defend itself. So now we're investing in defense companies in Ukraine, which are continuously being tested at the front and improved again. So it goes to show that you have one opinion, and it seems fine in peacetime, but in times of war, maybe you need another opinion. Principles are good, but sometimes they're tested by reality.
Yeah. And I can actually share here a small insight from Position Green. Maybe I forgot to mention also I'm one of the co-founders and chair of Position Green, but we also have ethical guidelines in terms of who we engage with as customers, and we actually mirrored it on NBIM's ethical guidelines. But we've also had very many sort of practical issues, and one thing we have is there's the right to reserve yourself as an employee of Position Green if you don't want to engage with that company, that it sort of it doesn't go with your own ethical view. And I would say sort of historically we had, when it came to arms or military industry, some reservations from especially young colleagues who did not want to engage with that. But as you said then, Johan, with the Ukraine war, it changed very quickly. So people who did not want to be part of projects involving military or industry customers all of a sudden said, I want to be on that project, because that's the concrete systems that are being used to actually then protect Ukraine and engaging. So I think this ethical journey here comes also down to people and having a sense of purpose, what's right and wrong, and that changes, as you say. But if we sort of looking a little bit more at you said you don't have any sort of red lines in terms of investing. You're now sort of made a change in terms of where you can go in terms of your investments. But is there something that you're seeing when we talk about sustainability or companies that is, if not a red flag, but it's kind of off-putting to you as a investor? Like it's a little bit sort of BS, because we hear a lot, you used resilience as like a consultant term, and when we speak about sustainability, it's often a lot of words, and we will say different things, and companies spend a lot of time on saying what they're doing on sustainability. But from your perspective, is there something that you think is sort of spending their time incorrectly, that it's sort of a little bit BS, and you would like to see something else when they describe what they do on sustainability?
I think thank you. I think we look more at the sort of investment plans, the capital allocation, and I think that comes far ahead of the narrative. So if we hear the words, it should already be in the numbers, kind of. So I think
there has to be a return case there, not just
well,
words.
the return you can measure over different sort of time horizons, but you can't say you're focusing on something if you haven't put your sort of R&D into it. So it's usually pretty easy to tell by the numbers whether your narrative or your story holds. Let's say.
Johan, anything?
Yeah, well, I mean, we like to turn companies around from being only oil and gas to being 50% wind and electricity. But you don't get any, I mean, it's a privately held company, so I mean, you don't get any super acknowledgement for doing that. We just do it because it's the right thing to do, but it's also that's where the business is. So and maybe we attract some fantastic engineers that we otherwise wouldn't attract to be part of that transformation. But if we did it just for the reporting or for the looking good type of thing, for the extra LinkedIn clicks, that's not sustainable. We actually want to be part of something or building something, a new type of business. And now we are getting some fantastic orders from all over Europe in building these platforms where the transformers are on. And right now we're the best in Europe to do that, maybe the best in the world. I mean, and that's a good thing. But the only thing why we were able to do that is that somebody said, it could have been me, let's keep the wind team on even if we get no orders. So there was a team that actually lost orders for 5 years, and then suddenly they started winning, and now we're
and what's the company you're talking about here? What's that?
Able,
right?
So
which came from oil and gas.
Yeah, exactly. It used to be ABB Offshore. So it's a nice. That been a nice journey.
You actually took a sort of a brown investment from Wallenberg and then made it a little bit more green.
It went through private equity a few times before that, but
there was a transformation.
So they put on a lot of debt, but then we.
Yeah, and of course CD predicted this. That's why they made the investment, and they knew you would.
Yeah,
do
well,
that.
I think it's before both of our time that we. So none of us can take credit for what was before us, but we're in the cleanup business partly. So
And are there from a sort of not a sustainability perspective, from a returns perspective, but where there is a potential impact, whether it's on social or environmental factors, what other opportunities are you seeing? You mentioned briefly Ukraine, but where I'm assuming it's still part of your role to look for opportunities, and you have teams test it out and find the actual investment cases, and whether the investment goes through or not is another case. But are there certain themes that you're seeing now that are exciting from a investment and do good perspective?
Well, there's one theme that scares the shit out of me and at the same time gives extreme hope, and that's the application of AI in one way or another. On the scary side, I mean, in 2015, I warned about the resurgence of autonomous weapons, and now they're here. And there's no one stopping them. So unless Xi and Trump sit down and see this as a real threat, but unfortunately only one of them is smart enough to see it. I have a wild guess who it is. I'm afraid that's sort of the existential type of threat, and when you couple that with AI sort of run loose or let them completely loose without regulation, like we are now, that worries me greatly. But at the same time, if you apply AI ethically, responsibly, we can pull back from the boundaries that Rockström showed. I mean, and we can do it faster than we actually than some of the scales predicted. But I'm afraid that that's not necessarily going to happen. So I think we need perhaps some regulation around AI that we can actually focus it on some of the things that really matter in terms of, and I'm talking survival of the planet, of us as species. Because people need more than nudging. I mean, we go off in all types of different directions all the time, and it's not always good ones.
No. And on that, I think the ethical dilemma or questions around AI are looming, right? You sort of have, as you say, a force of good in AI, and it can do wonders for science or medicine and cure illnesses. And we know the Nobel Peace Prizes the past 2 years, many of them are based on research that would not be possible without AI, so breakthroughs in chemistry and medicine. But at the same time, there is this whole conversation, including using AI for military purposes without any guidance. And there are AI companies that are now at a crossroad in terms of whether they hand this technology over to governments that can be trusted or not trusted. But from an investor perspective, do you have any guidance sort of on AI, how you want the companies you invest in to treat this from a ethical perspective, that it can kind of go both ways? Or what's the viewpoint of you as an investor on that topic?
I think from the sort of ownership perspective, our whole raison d'etre is to future-proof the businesses and the assets that we hold. And that is one part of it. I mean, for us, it's what you also talked about, the right person in the right place at the right time. It's also leaning into AI, and then it's sort of being competitive in a world where there's a price on carbon or even a circular economy. And so finding that USP, we give sort of directive or the sort of ownership perspective and tell where we want to go. But then you have to go case by case to each sort of business case or business model that you go into.
But would it be fair to say that being unethical is not sustainable? That if you're sort of called out, and there are companies now that are being questioned about their ethical practices when it comes to AI, or handing this over without any sort of safeguards or necessarily human in the loop, as we spoke about earlier. You don't think that is necessarily then a sustainable investment approach if they don't gauge this?
Right. No. So, I mean, the long-term horizon, we can't afford that for the sort of, call it, now I use the word brand too many times, I feel, when it's not necessarily, but the trust that we hold in our name, we really have to sort of take care of that. And I did mention, if there's one exclusion criteria, that would be less sound ethical standards. So I think those go pretty well hand in hand with how we think about it. So that's a risk we wouldn't be willing to take. I
do want to ask you a final question, both of you. Being asked about regulation, right? What we've described here is more your investment approach, what you think, what you believe. Maybe you institutionalize it, but what role should regulation play in all of this? Do you think they've got it right? Should there be more or less regulation on sustainability?
I have to say, I almost want to turn it around. I think I have two issues with regulation. One is that it has shown a bit of tendency to change too much. We like to be able to keep the sort of the capital expenditure, the vision sort of straight where we're going. And there I think it comes into play in a way that's not very constructive for our businesses. The other thing I think is Europe is a bit hung up on regulation, both the fact of do we have too little or too much, while other competitors out there, maybe China, are putting all their focus into execution, scaling up, and getting things done. So, and don't get me wrong, I think reporting is super important, comparability is super important. But I would not be happy if we got stuck in the regulation.
Predictability and not over-regulate. Or at least when you have it, make
or
it
not
predictable.
Over-focus.
Over-focus. Johan, views on regulation, and we're closing shortly here.
I would pretty much agree with that. I mean, Europe is coming a little bit from behind when it comes to competitiveness. So let's not make more stumbling blocks than necessary. I think we'll get a lot of things right. We're talking about the Nordic cooperation. It's got a lot of potential across borders, both in terms of resilience, in terms of defense, in terms of innovation, and in terms of sustainability. So I think there should be more nudging by government, because I think we will find a way to cooperate and actually behave better than we are behaving right now, without too much regulation. Some is needed, and I think there should be more on AI, for instance, and maybe sometimes when it comes to the boundaries, if we're getting too close to a boundary and the trajectory is bad, somebody needs to pull the brake and tell us, well, okay, you got to slow down here. Otherwise, you will get regulation. So the threat is sometimes more better than the actual regulation.
So we're going to have to end there, but I want to thank you so much for joining us today, Siri Sachs and Johan H. Andresen. We'll put in the show notes the sustainability reports of where they're invested, so you can make sure that they're walking the walk and not just talking here. And for this live audience here, you have the opportunity to grab a hold of them during the coffee break and ask them all those questions you didn't get to ask, or get those answers you didn't get. And thank you so much to the audience, to our speakers. Wonderful to have you here. Thank you.
Thank you.
That's it for this episode of Sustainable Edge. If you found today's conversation inspiring, make sure to subscribe and leave us a review. It helps more sustainability leaders find us.